Welcome to the Deep Dive. We're here to break down the latest earnings calls for experienced investors like you. Today, we're digging into Pulmonx. Their second quarter 2025 financials just dropped. And it's quite a story. Strong international performance, definitely. But they seem to be hitting some, let's say, unexpected headwinds here in the U.S. Okay, so let's just lay out the top line numbers first. Pulmonx reported total worldwide revenue of $23.9 million for Q2.
Yeah, which was actually a slight beat, wasn't it? Consensus was around $23.5 million.
Exactly, and that's up 15% year over year, so decent growth in the face of it.
Mm-hmm. And the EPS?
Also a beat, came in at a loss of 73 cents per share. That's 0.02 cents better than expected.
Okay.
And gross margin held pretty steady, right around 72%. So, looking at just that, you might think things are okay.
Right. But anyone listening to the call or watching the market reaction knows that's not the whole picture. Not at all. Despite those beats, the real news, the thing that dominated the call was the guidance.
Ah, yes. The full year guidance revision.
Huge revision. They cut the full year 2025 revenue outlook pretty substantially. Dropped it from, $96, $98 million?
Yeah, that was the original range.
Down to $92 million.
Wow.
So that implies much slower growth now, just 10% year over year. And that signals a real slowdown, especially, it seems, in the U.S. market.
The market did not like that one bit.
No, it didn't. Swift reaction. Yeah. Very negative. We'll get into that.
Okay, let's unpack this then. You mentioned the U.S. versus international. That difference seems pretty stark.
It really is. A classic tale of two geographies, you could say.
Yeah.
International was definitely the bright spot. Revenue there surged. A record 32% year over year.
32%? That's huge.
It is. Came in at $9.1 million. And management stressed it wasn't just one country. It was broad-based across key markets in Europe, Asia.
So strong global demand for the Zephyr valves.
Seems like it. And crucially, good commercial execution by their teams outside the U.S. They seem to be, hitting their stride internationally.
Okay. But then you flip the coin and you look at the U.S.
And it's, a completely different story. Domestically, revenue grew, but only 6%, much slower than expected.
6% versus 32. Big difference.
Huge. That came in at $14.7 million. And management gave a few reasons for this deceleration. Tough year-over-year comparisons, for one.
Okay, you're right.
But also a decline in conventional StratX scans.
The diagnostic scans needed to qualify patients. That's a leading indicator, right?
Exactly. Fewer scans potentially means fewer procedures down the line. That's concerning. And then perhaps the biggest factor they mentioned was operational pressures at the IP centers.
Interventional pulmonology centers. What kind of pressures are we talking about?
Well, it sounds like increasing attention on other procedures, maybe things like robotic bronchoscopy or lung cancer screening.
So those might be crowding out the Zephyr valve procedures.
Potentially. It could be constraining bronchoscope availability, diverting the focus of those key specialists.
So less bandwidth for Zephyr valves.
That seems to be the implication, yeah. A sort of bottleneck at the treatment centers themselves.
Okay, so connecting that back to the guidance cut, that $92 million target for the full year seems to directly reflect this U.S. slowdown, this conversion issue.
Absolutely. Management was careful how they framed it, though. They called it a recalibration based on timing. Importantly, not a shift in strategy or confidence in the long-term opportunity.
Right. They're saying the patients are there. It's just taking longer to get them treated.
Mm-hmm. But, for an investor, that framing of timing is where you start asking questions, isn't it?
Yeah. How much is really just timing?
Exactly. Is it something these new initiatives can fix quickly, or is it a deeper, maybe more structural issue with their U.S. approach? It's a bit of a wait and see.
Did they mention anything about costs in light of the lower revenue?
They did. They revised operating expense guidance downwards too, from $135 million down to $130 million.
So tightening the belt a bit.
Looks like it. Some targeted cost efficiency, which makes sense, helps manage the cash burn.
But the gross margin outlook stayed the same.
Yeah, that remained unchanged, still targeting approximately 74% for the full year.
Okay, so they've identified the U.S. problem. What are they actually doing about it? What are these initiatives to, fix this conversion bottleneck?
They outlined several things. Go-to-market initiatives, they called them, aimed at widening that patient funnel. One big push is direct-to-patient campaigns.
Going straight to the consumer.
Right. Using digital quizzes, inbound calls, even connected TV ads. Trying to reach patients directly. They expect over 70,000 first-time patient engagements this year from this.
70,000, that's a lot.
It is. And they said about one-third of the patients treated in 2025 so far actually came through these direct channels.
So that seems to be working, at least in generating leads.
Apparently so. Then there's the educational piece.
You mean bridging the gap between doctors?
Yeah, exactly. They've launched this new role, the Therapy Awareness Specialist, or TAS. Their job is basically to connect the community pulmonologists who might see these patients first with the specialized centers that actually do the Zephyr procedure.
Kind of like a liaison.
Sort of. And where they've put these TAS folks, they said patient workups are up by an average of 19%.
19%. That's encouraging. Early days, but encouraging.
It is. And then there's the tech side, LungTrax Detect.
The AI tool.
Yeah, AI-powered screening. It's designed to passively scan routine CT scans already happening in hospitals.
And flag potential emphysema patients suitable for valves.
That's the idea. Identify them almost incidentally. Early data from pilot sites sounds promising. One hospital apparently found 5 potential patients for workup within just 30 days of installing it.
Interesting. Passive identification could be powerful.
And they're also just expanding the basic infrastructure. Opened 12 new screening centers in Q2, trained 26 new physicians, trying to build capacity.
Okay, so lots of moving parts trying to see that U.S. funnel. What about the longer-term picture? Any other value drivers they talked about?
Definitely. Beyond these immediate fixes, they highlighted longer-term stuff. The CONVERT trial, for example.
What's that one about?
It's looking at using Zephyr valves in patients who have collateral ventilation.
Ah, the ones who are usually ruled out by the StratX scan.
Exactly. Apparently, that's about 20% of patients who get ruled out now. So if this trial works...
it could open up a significant new patient group.
Potentially, yes. They expect to finish enrolling for that trial in the second half of 2026. So still a way off, but important pipeline news.
And internationally. Any specific updates there besides the strong growth?
Yeah, they mentioned Japan specifically. They're running a post-approval study there, which they need for full commercialization.
How big's the market in Japan?
They estimate around 100,000 eligible patients, so significant potential.
And the timeline for that?
Enrollment should also wrap up around 2026, similar to CONVERT. And one other thing, a new collaboration with Jerger.
The pulmonary function testing company.
That's them, global leader. The idea is to embed the screening logic for BLVR for the valve procedure.
Right into Jerger's diagnostic equipment.
Exactly. Think about the scale. They said something like 16 million pulmonary function tests happen each year in the U.S. alone.
Wow. If they could flag even a small percentage of those.
It could identify a huge number of potential candidates right at the point of diagnosis. That's a potentially massive long-term funnel builder.
Did they give any more immediate positive signs? Anything turning around already?
They did point to one thing, those StratX referrals, the diagnostic scans.
Yeah, the ones that were declining.
Apparently they rebounded, hit record levels in June and July. Management sees that as a direct positive response to these new initiatives starting to kick in.
Okay, so maybe some early green shoots there.
Maybe. And interestingly, that other pressure point, the lung cancer screening focus.
Yeah, the thing diverting IP attention now.
While it's a headwind now, they actually see it as a future tailwind.
How so?
Because millions of these CT scans are happening for lung cancer screening. They estimate maybe 15% of those scans could incidentally show emphysema suitable for valves.
Ah, so similar to the LungTrax idea, but just from routine screening.
Right. So while it's causing friction today, long-term it could become another big source for patient identification.
Okay, let's talk cash. Always important for companies like this. How's the balance sheet looking?
They ended the quarter with $84.2 million in cash, cash equivalents, and marketable securities.
And the burn rate?
Cash went down by $4.5 million from the previous quarter. For the first half of 2025, total cash use was $17.3 million. Management made a point of stressing, disciplined capital allocation, managing cash burn.
Trying to keep it under control.
Yeah, aiming to track at or below the levels they saw in 2024.
All right, so let's bring this together for the investor listening. What's the critical takeaway here?
I think the absolute key is that divergence. You've got this genuinely strong, impressive international growth. The demand is clearly there globally, but it's being significantly overshadowed by this slowdown in the U.S.
The patient identification and conversion challenges.
Exactly. Those seem to be a real significant drag on the near-term outlook. It's not just a minor hiccup. It feels like a fundamental challenge they need to solve in their biggest market.
And the market reaction certainly underscored that, didn't it?
Unequivocally. I mean, despite the slight revenue and EPS beats, the stock just plummeted.
It had a small bump after hours initially, right?
Tiny bump. Then the next trading day, boom, down 41.6%.
41%. From $3.15 down to $1.84 on massive volume.
Yeah, that's not just noise. That's the market sending a very clear signal.
A loss of confidence in that near-term U.S. ramp-up.
Completely. And then you had Piper Sandler downgrading them to neutral, cutting the price target to $2.50. They used phrases like credibility risk, implying it's now a show-me story for Pulmonx.
The market is basically saying, we don't believe the turnaround story yet. Prove it.
Pretty much.
And you mentioned this isn't maybe just a Pulmonx issue. It fits a broader context.
I think so, yeah. Small cap med device, especially those exposed to U.S. hospital procedures, they remain really sensitive to staffing issues, referral bottlenecks. We've seen similar stories play out. It's tough for innovative tech to get traction when the system itself is strained.
So while Pulmonx management is talking up their efforts to fix that funnel,
the market's clearly skeptical and waiting for hard evidence. Tangible results. Success is going to be measured by whether things like LungTrax and the TAS role actually start translating into a noticeable uptick in procedures. That's what everyone will be watching.
Right. You need to see that U.S. procedure growth re-accelerate to rebuild confidence.
Exactly. Management sounds confident long-term, but the near-term sentiment is definitely cautious. Lots of scrutiny on U.S. execution in the next few quarters.
The ball is definitely in their court now. Okay, so moving to our not financial advice segment, let's get a bit creative here. Given this massive stock drop, the high uncertainty, but also management's sort of defiant tone, it's when, not if, for the U.S. recovery. What's a potential, maybe slightly wild trade idea here?
Well, acknowledging this is absolutely not financial advice, but thinking about how to play that uncertainty itself, you could consider something like a long strangle.
Okay, explain that. Buying both calls and puts.
Right. Buying both an out-of-the-money call and an out-of-the-money put option, probably with a longer expiration, maybe 9 or 12 months out.
So you're not betting on direction, but on a big move happening.
Exactly. The logic is the market is pricing in a lot of pessimism right now. If somehow management pulls a rabbit out of the hat, these U.S. initiatives really kick in faster than anyone expects, and they deliver a huge beat on this lowered guidance.
This stock could rebound very sharply from these depressed levels.
Precisely. And your long calls would become very valuable.
Okay, that's the upside scenario for the strangle. What about the downside?
Conversely, if the U.S. struggles drag on even longer, maybe well into 2026, if they have to cut guidance again, or these IP center issues get worse,
the stock could easily drop significantly further.
Right. And in that case, your long puts would pay off.
So the trade profits from a large move, either up or down, driven by whether this U.S. recovery happens sooner or much later than currently expected.
It's a bet on volatility, essentially. Capitalizing on the high uncertainty around the timing and the magnitude of what happens next with their U.S. business. Your maximum loss is limited to the premium you paid for the options.
A calculated bet on a binary-ish outcome, driven by that U.S. growth story uncertainty. Interesting, definitely not advice, but an interesting way to think about the situation. All right, so just to wrap things up, Pulmonx Q2 2025, a real mixed bag, wasn't it?
Absolutely. You had that strong, robust international growth, really impressive, but completely overshadowed by the weaker than expected U.S. performance.
Leading to that significant cut in full-year revenue guidance.
Yep. The company insists they're on the case, implementing strategies to fix the U.S. conversion issues.
But investors are clearly hitting pause, taking a cautious stance, waiting for proof.
They need to see concrete evidence that those initiatives are actually turning things around in the U.S. Management believes the strategy is sound, focusing on widening that funnel, improving conversion, leveraging international strength, and those longer-term catalysts like Convert and the Jurger deal.
But the big question for you, the investor, isn't just if it will work.
It's when. And will the market have the patience to wait for that inflection point? The next few quarters are definitely critical for Pulmonx.
And just a reminder, everything we've discussed here today is for informational purposes only. It should definitely not be considered financial advice. Always do your own research, your own due diligence, and consult with a qualified financial professional before making any investment decisions. That wraps up this deep dive. Thanks for tuning in. We'll catch you on the next one.